Hello traders, Gary Wagner for Trending Markets. It is Friday. Happy Aloha Friday, as we say on the islands. It is the 13th day of November, 2015, and we are looking at the Dow Jones Industrial Average closing off strongly to the downside again. Another loss of about 1% plus on the day. 17,245.24, putting it off about 200 points today. When we look at our weekly chart, you can really see what kind of devastation we've seen in terms of the market, which was trading at a high of 17,900, call it, all the way down to 17,200. So we've seen a considerable drop in value, a drop in price all throughout the week. So the fact that we have seen this market under pressure, U.S. equities as a whole, does not surprise me. But I am expecting this pullback to be relatively shallow, and I do anticipate a return to a rally mode as we go in through Thanksgiving into Christmas. I do believe we will see a rally going in towards the end of the year. Now, when we look at the Dow Jones Industrial Average, this is a 480-minute chart, and we've put in a linear regression, which is basically a bullish set of channel lines right in here, and we are now really at the lower end of this channel with today's move down. And so my question that we'll want to look at as we begin trading next week is, will we find support in this area, and will we begin to move back up off of this particular point? And so to that end, I want to take a close look at the E-mini Standard & Poor's, and I want to look at it through a couple of different studies. First of all, when we consider the move that we have recently seen in the marketplace, in which we went roughly from 1860 up to about 2100, we are currently at a 38% retracement. If you look at the low of the day, it matches up quite eloquently to this 38% retracement level, and we have absolutely broken below the 200-day moving average, although we are still quite above the 50-day moving average. My sense is that we will see this market find support and bottom somewhere in between, call it 2014 and the 50-day moving average. I really believe that the 50-day moving average will hold. So we want to look at an area in which we find a critical pivot point, because my sense is, when we look at our current Elliott wave count, and let me go ahead and compress this chart, it is my sense right now that this low that we achieved most recently really concluded the end of a primary fourth wave. And what I mean by that is we're looking at something like a wave 2, wave 3, wave 4, and this wave 5. This wave 5 concludes our primary fourth, and I also believe that we are now in a fifth wave rally mode. We've seen wave 1, and this wave 1, of course, was this most recent rally. I believe that we're currently in a wave 2, and following the conclusion of this correction, we will move back to a wave 3, and it is wave 3 that will take us to record and new historical all-time highs in the market. So as I said, the real question is, will we find support in this market next week? Will that occur close to this price point, the 38% retracement level? Will we clear this point and go closer to this 50-day moving average, or find support? And that's what we'll have to see in terms of how the market unfolds next week. In other markets that we are looking at, US dollar did find some support today at that 98 on the index. When we look at our daily chart, you can see that we had some real resistance up around here at 99.50. We had a couple of down days, but very, very quiet activity in terms of the relationship between the open and close. And when we line up this particular low that we got this week at 98.50, you notice that it does come in above all of these most recent tops in here. So we're still firm in terms of our outlook on the dollar. We still believe that there is more room to the upside, and we could absolutely see that as early as next week. Lastly, in terms of the dollar index, I draw your attention to this chart I just put up on the screen, in which we are looking at a real potential golden cross here. We have been waiting to see if the fast moving average would cross back above the slower of the two moving averages. This blue one representing a 200-day, green one representing a 50-day moving average. And lastly, I do want to take a quick look at oil. Oil plummeted this week. Today alone, down another 2+%, 96 cents per barrel, below 41 at 40.79. The low 40.22. When we look at our weekly chart, we can see the kind of devastation we have seen in this market. Now, the entire commodity complex has been under pressure, there's no doubt, but it does appear as though this market could easily test 40. I don't know if we'll come back down to these 38s that we saw, but it wouldn't surprise me at all. So in conclusion, we are looking for a potential end of the correction in the S&Ps. That is absolutely a market we're going to be looking at from the long side. I believe we will go to new highs in that market as we approach the end of the year. Secondly, I think that the dollar will continue to gain strength. I'm looking for that to go to 100 on the index. And lastly, crude oil, I think we will see more downside pressure. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you on Monday for another Trending Markets. Bye-bye.